Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about LEGENDHOLDING interim report. Legend Holdings Corporation operates a diverse range of businesses across various sectors. The company's key areas of operation include industrial operations, plus intelligent devices and infrastructure, plus advanced material products, plus agriculture and food-related businesses, plus integrated banking services, corporate, institutional, retail, private and capital markets, industrial incubations and investments, plus private equity and venture capital funds, plus aviation logistics, plus financial services, plus medical and healthcare services, plus office leasing, plus car management software, plus chemicals and energy materials, plus car services, plus information consulting, plus cold chain, insurance, investment management, and medical consultation services, other businesses, plus real estate investment and asset management, plus enterprise management and project investment, plus agriculture product planting and trading, plus agricultural investment and logistics, plus food investment activities, plus seafood and animal protein-related products trading and processing, plus office building rental and services, plus new energy technologies development and manufacturing, plus banking and insurance services. Legend Holdings Corp.'s stock price skyrockets. A year of breakthroughs. In the past year, Legend Holdings Corp. has witnessed a remarkable surge in its stock price, rising by an impressive 126.78% from its 52-week low to high. Several key events and announcements have contributed to this upward trend. The company's positive financial results for the first half of 2025, which included a net profit attributable to the parent of RMB 699 million, highlighted its commitment to innovation-driven empowerment. The strategic focus on sci-tech innovation, as announced in March 2025, generated investor confidence in the company's future growth prospects. The performance of subsidiaries such as Joyvio Food Co., Limited, and ongoing investment activities, including funding for Tianjin MNCHIP Technologies Co., Limited, have also provided a boost to the stock price. The culmination of these positive announcements led to the stock reaching its 52-week high of 12.7 on August 27, 2025. These breakthroughs have collectively driven Legend Holdings Corp.'s stock price to skyrocket in the past year, solidifying the company's position as a leader in innovation and growth. The primary drivers of revenue growth for the company are diverse and multifaceted. Key contributors include diversified industries operations, Lenovo's significant growth, and industrial incubations and investments. The company has also seen increased investment in technological development and innovation, particularly in emerging industries such as AI, foldable phones, and AI servers. The expansion into new business opportunities in emerging frontiers and leadership in strategic emerging industries have also driven revenue growth. Furthermore, the company's effective cost control measures, optimized product mix, and strengthened cost controls at Lenovo have contributed to its success. In addition, the company has seen double-digit revenue growth across all three main business segments of Lenovo, as well as accelerated adoption of AI PCs and PC business growth with a record-high market share. The Solutions and Services Group has also experienced double-digit year-on-year revenue growth for 17 consecutive quarters. On the other hand, the primary drivers of revenue decline include intersegment sales/provide services decline, allowance for billing adjustment, written put option liability, warranty claims, environmental restoration provision, restructuring costs provision, and decreased interest income on bank deposits and money market funds. Net income and profit margins show significant improvement. Lenovo's net income has seen a substantial increase of 144% year-on-year, indicating a significant improvement in the company's financial performance. Additionally, profit margins are also on the rise, with notable increases in specific business segments. The Diversified Industries Operations segment saw a 28% jump in profit margins, while the SSG operating margin rose by 1.2 percentage points to 22.4%. These improvements suggest that Lenovo is experiencing improved profitability across its main business segments, contributing to the overall increase in net income and profit margins. The company's financial performance indicates a strong ability to generate cash from its core business operations. With a significant amount of cash generated from operations at RMB 5,174,291, the company is clearly producing positive operating cash flow. This is further reinforced by the net cash generated from operating activities of RMB 1,947,472, demonstrating a substantial inflow of funds into the business. The company's debt level and interest expenses have undergone significant changes. The total debt level has increased by 6.4% from RM 131,245 million to RM 139,613 million, indicating a rise in the company's financial obligations. However, this increase is not uniform across all types of loans, with bank loans and overdrafts experiencing a decrease in interest expenses. In contrast, interest expenses have decreased by 19.2% from RMB 4,599,365 to RMB 3,616,689, suggesting that the company has managed to reduce its financial burden through effective debt management. The overall finance costs have also decreased by RMB 410,641 from RMB 4,729,984 to RMB 4,319,343, further indicating a reduction in the company's financial expenses. The company's financial performance was mixed across various segments and regions. On a positive note, Lenovo's PC business achieved a record-high market share of 24.6%, while its AI PCs accounted for over 30% of total shipments. The Infrastructure Solutions Group in China also experienced rapid growth. In addition, the Solutions and Services Group saw success in support services, managed services, and project solution services. The fruit business and Australia's Seafoods SA narrowed their losses, while KB Food made steady progress with its new product strategy. However, some segments underperformed. Joivio Group narrowed its year-on-year losses, but still reported a loss. The Levima and Joivio Incubations and Investments segment, as well as the unallocated segment, also incurred significant losses. Management is optimistic about the company's outlook, driven by its core businesses, including Lenovo. They prioritize steady economic growth in China while pursuing strategic progress. Innovation is key to business growth, with a focus on emerging industries such as AI, foldable phones, and AI servers. The company aims to develop high-quality productive forces while prioritizing ecological preservation and sustainable development through investments in green technologies. Long-term growth and strategic layout in key fields are emphasized, with a focus on leading enterprises with scale advantages and excellent profitability. To navigate economic uncertainty, the company is optimizing its business structure to improve resource allocation efficiency and focusing on key markets and customer groups for commercial banking business. Management is committed to revitalizing China through business across industries and advancing technological innovation by investing in early-stage venture capital and growth-stage equity. Overall, the company's strategy focuses on driving long-term growth through strategic market expansion, AI infrastructure innovation, and operational efficiency improvements. Acquisitions and divestitures. Overview. Lacala has made strategic investments in various companies, with one notable acquisition being its investment in Tiankai Shanglong, Chinese letter, as mentioned on page 26. This move is likely aimed at expanding Lacala's business reach and capabilities. On the other hand, BIL has divested from two entities, Belair House and BIL Manage Invest, as stated on page 12. This decision may be part of a broader strategy to streamline operations or focus on core businesses. The company's financial summary reveals a clear indication of its commitment to shareholder value. Specifically, the company has indeed paid dividends, as explicitly stated on page 61. The exact amount of 170,831 RMB further underscores this commitment. This demonstrates that the company prioritizes returning value to its shareholders through dividend payments. Concerns about inventory buildup or supply chain disruption exist. The financial summary highlights concerns regarding inventory buildup or supply chain disruption. On page 16, it is noted that the EVA facility's annual production capacity is expected to exceed 350,000 tons by the end of 2025, indicating a potential for increased inventory levels. Furthermore, on page 67, there is an increase in the cost of inventories sold from $181,630,919 in 2024 to $225,371,121 in 2025. Additionally, the inventory write-down decreased significantly from $430,941 in 2024 to $77,651 in 2025, suggesting that the company may be holding onto more inventory than necessary. These indicators suggest that there are valid concerns about inventory buildup or supply chain disruption, which could have significant implications for the company's operations and financial performance. That concludes the financial summary for LEGENDHOLDING. Feel free to comment below, and I will be happy to answer them when possible.